Hi, Steve Van Metre here, and welcome to your Wednesday night premiere, where we take about 15 minutes every Monday and Wednesday night to try to make sense of markets that just don't make any sense. Because today, well, actually last night, and kind of the night before, we started getting some news out of China that the trade war wasn't coming to an end as soon as the Trump administration has told us. Now, just to preface this, I'm not picking on the Trump administration or China. I'm simply going to make this statement that negotiating with a communist country never goes the way you think it will. And if you do, you have to keep in mind they're a communist country. They follow their own rules, not ours. So we heard there, as you probably know from the news, we heard the trade deal was getting very, very close to being done. Now let's back up to October, when I said, keep in mind, there was the October 15 tariffs that were coming up, and out of nowhere, I mean, it wasn't really nowhere, as soon as the China, was their 70th holiday or anniversary, or whatever the holiday was, there's a huge delegation over. Everyone's like, this is it, they're sending the big crew over, and they get this deal done. No, their job was one and one thing only, and I said it was to make sure those trade tariffs did not come in place. Vice Chairman Liu did an excellent job. They were not put in place. And then this got shifted to a trade deal was going to be signed at the APEC summit. I forget, Chile, I think it was. And I don't know why that meeting got canceled. The whole summit got canceled. And all of a sudden we heard, hey, we're really super close. We heard on both sides, which is interesting because you hear China playing this game now. It was really, really close. We'll find an alternate location, perhaps even in the United States. And I thought, well, that's kind of interesting. And why would it be here? Well, because Xi Jinping is headed to Brazil pretty soon. I don't know if it's next week that he was doing this for. I'm pretty sure it was before the APEC summit would have been, I think, toward the end of November. But anyways, he's headed to Brazil with some other heads of state to probably do some negotiating over agricultural commodities. The idea was floated that he would then stop through the United States, perhaps in Iowa, and sign a deal saying they're going to buy $20 billion a year of ag commodities, not to mention some other things. And on that note, people in the ag space have said that China has, over the years, increased their purchase of our agricultural commodities simply because their population, keeps growing. And they said estimates showed that China should be buying 25 to 27 billion of our goods right now, and this deal is at 20 billion, which is where they were at several years before. But I didn't buy that Xi Jinping was going to come to America, and let me tell you why. Think of this, this is a trade war, so let's use the term war. When one side is done and they're going to surrender, where do you sign the surrender paperwork? Do you sign it on the location of the losing side choice? Or do you sign it on the side of the winning side's choice? Well, you sign it where the winner does, because they won. And what would look really good for President Trump's impeachment stuff going on, I'm not following it too closely, and his upcoming election? Well, it would look really good to bring President Xi to the United States to sign the deal that you wanted. It would look great. I didn't think that was going to happen, and it didn't. So what did we start to hear out of China two days ago, after the U.S. stock market closes, conveniently? That they wanted a rollback of the September 15 tariffs. And then, of course, U.S. investors got excited thinking, oh, yes, there's rumors out of the White House that they'll do that. I don't think they're going to. And then the following day, last night, we get news from the China state media that they want all the tariffs removed before signing the phase one deal. And President Trump has been very clear that he's not going to, and now we haven't heard anything on that in the last 48 hours, but he's been previously clear that the mechanism to make sure China adheres to this agreement is the trade tariffs, and they wouldn't go away until sometime later, until China's honored their agreement. Now the new news is they're working on the final details and some location for a meeting. But the reality is, when you negotiate with a communist country, who has a president elected for life with another country, ours, was a president that's going for re-election in, we'll just say 12 months. One is running at the end of the road. Every week that passes is less time. And what came out of the news today was from the White House was that China is eager to make a deal due to the impending impeachment stuff and the potential re-election of President Trump. Let me just put it to you this way. If you think China cares, and they don't, they're playing the long game. China has had some stuff going on inside their country lately that's really made President Xi and the government feel very strong. And they just floated, I believe it's their first euro-denominated bond, which is very interesting. So they're already looking for ways to divest themselves from the United States. They can't completely, but they're looking to do it. But this trade deal is different than, say, the USMCA. And the reason that's held up is because Congress isn't happy with the deal. And they're reworking it, and maybe it'll happen, maybe it won't. I don't know. So we're still under NAFTA. But this China trade deal is different. We, the United States, are asking them to make all the changes. This doesn't go in front of Congress because we're not conceding anything. We're saying, look, you're going to buy all these commodities. You're going to change your laws. You're going to do these things. And what are we going to do? We're going to remove some tariffs. Well, we don't need congressional approval to remove tariffs because President Trump can remove them if he wants to. So let's just put this notion out there. Because I don't buy the news today that China is eager to make a deal ahead of the election. Because let me ask you a question. Let's say a Democratic candidate wins the election. How long do you think it will take them to remove the tariffs? Probably not very long. And in fact, I'll tell you how it's going to go if that were to happen. Because when a new president comes into office, and I'm not suggesting this is going to happen, I'm just suggesting what could happen. That president receives phone calls from heads of states from all over the world over the first week that they're in office. And how long do you think it would be before the call from China came in to congratulate him or her to say, oh, by the way, President Xi, those trade tariffs? I'm going to remove them effective immediately. And can we go back to doing business as normal? Yeah, we can? Great. Thank you. Click. That is how easy all of this can be undone. And if you don't think China knows this, they do. And they know that with every passing week, they are getting the stronger hand. Because President Trump has even remarked him to his people in the White House that when he tweets about the trade war, stock prices go up. So what's going to happen when the market finally wakes up to the fact that the global economic data is headed into a recession and the U.S. stock market goes down? I've always said, and I will say it again, presidents should never take ownership of the stock market and use it as a trophy because it's a sword that can cut both ways. And China knows this. It's only a matter of time. I mean, think about this. What if Xi Jinping came to the United States to sign a deal and then walked away saying, you know what, not signing because you didn't take the tariffs off? Even worse, what if there was a meeting in December in China and President Trump flew there? And in that meeting, President Xi walks away saying, you don't remove the tariffs, we have no deal. How humiliating would it be for President Trump to fly home on Air Force One when that happens? Stakes are real, folks. And the stock market is in la-la land, and the economic data keeps saying recession, recession, global recession is coming. The content of this video is provided as educational information only. Is not intended to provide investment or other advice. Materials not to be construed as a recommendation or solicitation by a security, financial product, instrument, or to participate in any particular trading strategy. This video was prepared by Steven Van Metre, our own person passing opinions expressed in the video that do not reflect the view of Atlas Financial Advisors Inc. or Steven Van Metre Financial. And as we look over the economic data, which is something that I do, last week, this week, week before, I mean, you're hard-pressed to find anything that shows reflation. Anything that says these three rate cuts from the Fed are working, or the overnight repo of up to where we run like $200 billion on any given day of Fed loans. They're not working. What about the $60 billion the Fed monetized last month? We'll know tomorrow. So far, not working. It's not working. Why do you think President Trump is tweeting and telling people to start spending their stock market gains? He knows. If we look at the NASDAQ McClellan Summation Index, proxy liquidity is back right near where its prior little high here. Not very strong considering markets are sitting right at their all-time high, but on very low volume. Remember, we were told that if prices break out, there was going to be a surge of buying, and so far, there's not been. I want to show you something in the economic data. This is investing.com. You can go here and under news, you can go to economic calendar, and we saw a big build in crude oil. I've been expecting this to continue, almost 8 million barrels last week, which is well above expectations of 1.5 million. And that is due to the fact that exports are down, but not entirely. But the global economy is shrinking. And when you see imports and exports fall, it means the global economy is shrinking. And what happens when the global economy shrinks and a country such as the United States is producing, I think, the record amount of oil? Could be wrong. Don't hold me to that. But we're also number one exporter of oil. What's going to happen is demand goes down. Now, as far as gasoline prices, those that have gas-powered cars, I don't, but my wife does, and she's not here to tell me what gas prices are. But anyways, what is keeping gas prices up? Well, let's take a look at gasoline production. And we'll zoom in over the last year, and you can see 1, 2, 3, 4, 5, 6 weeks, pretty much ever since the oil companies raised gas prices, you have 6 weeks of effectively negative production. They're slowing production down deliberately. There isn't so much a gas shortage as they are deliberately refining less product into gas. That's what's really going on. So let's take a look at some charts. We've got a couple minutes left. Not a whole lot to see here, but let's take a look at the bond chart. We'll start with the 30-year treasuries, tagged their 100-day moving average, held there. Again, no sign of reflation in the economic data. I do expect yields to go back down to their all-time lows. We have a gap here that's yet to be filled, a gap here. There's a gap hiding here that you can't readily see. And there's a gap here and there. There are no less than 5 gaps that need to be filled on the way down. And when we look at what happens, you can see here's a gap, gets filled, gaps get filled, here's a gap, got filled. Gaps do come back and get filled. It's little telltale signs. Like today, the bond prices started, when we're looking here at TLT, a gap up, and they came back down and filled that in. So we still have the gap here, here, and there. There's your 5 gaps. And what's nice is we're seeing decent volume here. You always want to be concerned when you're seeing prices fall and volume is very weak. But what you're seeing is a decent mix of buyers and sellers. More importantly, you're seeing buyers step in here as well. And I read an article yesterday that said a lot of these quantitative computer models were going to start selling shorting the treasury bond market today. If they did, the market had no problem absorbing it because yields did fall. And why did they fall? Well, there was a nice 10-year treasury auction today, and that auction showed a strong demand from foreign central banks and investors. And foreign central banks are the smart money. They know when deflation is coming. And if you're in a foreign country exporting to the United States and your orders are falling and you're exporting less, guess what? You already know. You know before the United States knows what's coming. So why do they buy bonds? They're smart money. And so that's what they've been up to. But looking at oil and gas producing stocks, which got a little bit of a rally here off their lows, is, again, everybody's so bullish that this trade deal is just going to cause this huge surge in global growth when it's really nothing more than a farm package. What you now kind of see is a left shoulder ahead, right shoulder, and then we saw oil and gas producing stocks tag their 50-day moving average and hold there. But nevertheless, in terms of volume, again, as I mentioned earlier, we were told if markets break out over this level here, so this is the ETF symbol SPY, this is a huge surge. Stock market is going to rocket higher as people are going to get shorted out of the market. But look at trading volume. What you're seeing here is no real interest. I mean, these levels down here are about what you get on a holiday. I mean, if we go back to November of last year, let's see, November here, Thanksgiving right here. Trading volume, on a half day is what we get in a full day now. So the demand for buying stocks is weak because, again, we're stuck in those deep monetary lags that still have a long ways to go. The economy is tightening. That's why you want to own bonds. Until Friday, I'm Steve Van Metre, where we got our deeper dive into the economic data. And we'll find out if any of the Fed's policies are working when we take a look at the monetary base. Got a hunch? Not working at all. Until Friday, bye now.